Hey everyone, welcome to Breakout Wednesday for the 5th of April 2023. It's currently 3:30 p.m. on the West Coast, 5:30 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, before I get cracking on stocks, I just wanted to have a shout out to the Protrader crew. Frank Watkins has been really instrumental in my trading career over the last 23 years. Is putting on a workshop in Vietnam 3rd, 9th of June. Okay, it might potentially be one of Frank's last ever trips overseas doing these talks. He's been doing them for 20-something years, right? They're really cool, real fun, have a good holiday. This might be his last one, guys. So for those of you who know Frank and love his work, get along, check it out, email joe@protrader.com.au. All right, now let's move on to some stocks. 2 weeks ago when I chatted, we were down here, right? And we just had this vicious sell-off and all the SVB kind of bank collapse shit was going down, right? So it's obviously we've bounced since then. We've had a really nice bounce with some big moves going down, okay? I stated 2 weeks ago that I'm still bullish on the market. I just think that there's so many signs to me to be bullish. There's breakouts are actually holding now, and I'm still bullish. I think I've got more exposure to the market now than I have since the COVID boom. I don't think I've had a higher exposure since. Okay, moved a decent whack of my account into stocks, and so the last kind of 2 weeks have been really good to me. And let's just quickly run through what's happening. So obviously gold is rallying. Okay, this is a gold ETF on the ASX. It just made new highs. Okay, I was talking like a few months ago about how to watch the gold stocks, and that they were probably just setting up back here, and they're probably going to go a lot higher. To be honest, I did not really capitalize on it properly. I fell asleep on gold, to be honest. Just been looking at a bunch of other stuff, and I let the gold train get away from me. That's life, you can't catch them all. And let's just rattle through some trades really quickly from the last few weeks. MNB, I'm still in. Okay. As I said the other week, I took a bit off at 1.6. Actually, I probably said that in my email newsletter thing. And I'm still in the rest. And the MNB, I'm not looking at this stock during the day, right? Because obviously it's a small cap, a micro cap, and each tick is worth a decent whack of cash, right? And so if I go in my account and start looking at it and it's down a few ticks, and it's just going to freak me out, and I'll probably sell it. It's just, to me, I'm just riding this thing. I'm just going to give it a chance to fling higher. And it's like, your psychology is weird. Like if you go in and start looking at the daily swings and the tick-to-tick swings, I start thinking back to the days when I had a proper job and worked for someone full time, all that awful stuff, and you start comparing it to how much money you'd make in a day or a week, and then you see this thing tick down 2 ticks and like shit, and you compare it, right? And everyone does that. It's human nature, and you freak out and you press the sell button, and the next thing you know, this thing doubles. So for me, maybe it's a bit of mental weakness, but I've learned that stuff like this, I just don't look at it. I just look at it after market closes. I have a look at it. Intraday data would kill me. Like whenever I look at intraday stuff, I just make mistakes, right? We're all human, so that's how I'm handling MNB. There's been some breakouts, like WTC had a nice breakout at the Davis box. I'm in it, sitting tight. ADT poked out and came down. Had a wick down today and had a back close. It wasn't too bad. I'm trading this Davis style, guys. So smaller position, classic Davis. I'm just having my stop below the Davis. I'm even using the 2% buffer on the bottom of that. Much smaller position. I can add to it if it starts, breaking up above here. I'll probably pyramid into it. So let's just give that some room. I'm doing the same with WTC, ADT and WTC, and give some room. I just need one of those to be blowout winners and the other to just, not gap down 50%. AAPL, Apple, okay, this is by far my biggest position, as I stated a few weeks back. Still in it, haven't trimmed anything. I'm going to ride that sucker for as long as I can. gear that I talk about probably too much, and it probably gets a bit irritating. It hit my buy zone. You know, I was been posting to Twitter and talking about it here, and it's one of these things like I had a buy zone of the low 23s, but then the I didn't see the SVB thing happen, the Silicon Bank collapse happening. That happened. And then I just reiterated my call. Plus Frank told me that he reckoned it was going to go to 22, low 22s. It hit 22.20, so pretty good call there by Frank. So I pulled my order at 23s and picked up some at 23.5, 23.9, and a bit lower than 23.5 too. So I've got a pretty damn good average price for my latest purchases here. And it's about, I just love it. That you get a feeling once you do this for long enough when everything that shit's hitting the fan on these market pullbacks, and sometimes you get a feeling, you know, the market will already collapse a lot, and then it'll just gap down again, but it will be kind of a bit of exhausted, you know, and then they're the days I'm getting text messages from old mates freaking out about the market. They're the days I really need to eddy up. But with gear, I also just have my buy zone that I try and hold to, because the next thing you know, the market's up and it gaps up 3%, right? Then it has a 10% move or 5% move or whatever, and you get left behind. There's something like gear that's kept collapsing. I just kind of buy more of it, right? Crazy shit, but it's really, really working out. On my next email newsletter I put out, I've nearly finished it. I've been working through a spreadsheet showing dollar cost averaging into gear, and if you put X amount in every time it dips and reinvest your dividends, how quickly your account will grow. It'll blow some people's mind, right? But I'm going to show the evidence to that in the email newsletter. So sign up to it if you haven't, for a bit of fun, right? It's free, obviously. I'm in zero now. Okay, I'm in it, and it's a messy base, but they get like that sometimes. But it's in a stage 2 advance now. It's a stage 1 base, in a stage 2 advance. Big gap ups, nice volume. I like it. I'm going to hold it. This is not a trade. Okay, I want to be in that for a very long time. Okay, I view zero a bit like ResMed. It's just these are probably the 2 companies on the ASX that I think are the best businesses out there. Well, some of them anyway. There's a lot of great businesses, obviously, but I really like these 2. And I'll continually buying the dips on both of these, especially while they stay in major uptrends. The IFM trade, I didn't actually take that one, but it's kind of just grinding sideways, isn't it? It was looking nice back there, but it didn't base for long enough, and now it's just whippy and a bit of a mess, right? So I dodged that one, but I got stuck in ADT. So we'll see how ADT unfolds. The other thing, just quickly before I get on these setups, is, these are my long-term moving averages, and all of these kind of tech ETFs are just starting to form uptrends. Okay, I think we need to start thinking that this bear market's over. I was talking about Hack a few weeks ago, how we had this big flush out, and it's just such a huge sign of a bottom. It gave us its flush out, it's come up. But what I really care about in terms of uptrends is what the moving averages are doing, and has that stock or whatever had enough time and gone sideways long enough for all the moving averages to start getting in line, which it's done. And it's not just Hack, like NDQ's doing it. Okay, that was the wrong damn one. I always do that. NDQ's well in an uptrend now. Cloud is in an uptrend. So when I see this happening, then I start thinking, shit, all the evidence is telling me that we're in an uptrend. It doesn't matter what the stupid news is saying and people are crapping on about, interest rates and property. It's just, I'm looking at this and then I'm trying to get really good setups in stocks in really, really good companies. Okay, it's really simple. Great companies that are printing money and growing revenue, and companies that have really, really good chart setups. I'm trying to combine the 2, right? Sometimes I talk about technicals way too much, but find the success rate goes through the roof exponentially when I combine the 2, right? Awesome fundamentals backed up, and what I mean by that is growing revenues, growing earnings, all that sort of stuff, kind of low debt if possible, actually companies that are making money, because that's the whole damn point of business, right? And so that is that, right? And so I'm trying to combine the 2, and that is when you get the best results as far as I'm concerned. A few setups, okay, and a lot of these are not ready, okay? I don't know anything about copper stocks, to be honest, and I don't even really know much about the copper market. It's not something I spend much time reading on. Hot chili is stock that people, a lot of people talk about. And I probably will do some reading. This is not ready. This is sitting in a Davis box. One sec. I'm just going to quickly do the scan. I think it helps a lot of people figure out how I find these. So just going to quickly scan that. And then, I do this all the time, right? And then, okay, and then hot chili just comes up in that Davis box. So this is a short-term Davis box. That's not a real base for me. This is a nice stage 1 base. Okay, the moving averages come together. It's broken out of that. That's great. But now I missed this initial entry, okay, because I wasn't looking at it. Now it's come up in this Davis box. So for me to now take that, I either need to buy it down here on a wick back down here so that it's the same as entering back here. I'm not going to pay up and start paying up here for it unless it bases for long enough, right? I'm kind of contradicting myself, but if that bases for 2 or 3 weeks in this Davis box, gives me a real nice launch pad, then I'll put an order in to trade that break, okay? There are some fundamental stuff going on with copper right now that obviously, I do know a bit about it, but it's probably, I don't know much. What I mean is I don't know that much about this actual company, and I haven't really tried to, but I probably will over the next week because that's at least a week away from being ready for me. Then there's some other bases, right? ARB, some of these consumer discretionary stocks are starting to set up. See, ARB was a darling during COVID, for those who remember. Okay, faked out back here is a classic top-in faking sort of pattern. Came down, massive stage 4 decline and has put in this big sideways pattern and all the move. It's starting to jump on top of all its moving averages, okay? If this can base and just longer, it's just got potential. And this stock has real fundamentals behind it, okay? Just, do your own reading on it, but they make money, okay? And another one, the stock that has like a monopoly, really, that dominate their space is carsales.com. And this came up in, just one sec. Sorry guys, I meant to show how I found these stocks. So this came up in I always do this scan every day, Frank scan, right? Just a basic, it's a really simple scan, just finds bases, okay? It's a beautiful scan, right? It just finds so many great bases like this. And so ARB just came up in a Frank scan and, and that to me, it's good at just finding these stocks sitting in a stage 1 base with the potential to turn up, okay? And then the other one that's sitting in a nice base that I'm just going to find, I went the wrong way then, is car sales, okay? So it's obviously just churning sideways for a long time and it's now putting in this big base. I'd love it to tighten a bit longer, but this is a stock that has pretty much monopoly in what it does. If you're going to sell your car, I guess you can do it on Facebook Marketplace, but it's tend to be pretty shitty, pretty cheap, shitty way to go about it. Whereas car sales is a bit more legitimate, and so and they're growing. They've got there was a podcast that Equity Mates did with them a few months back that really went into how they're growing and their growth markets and the company. It's pretty interesting. So car sales, that's just came up in a big Davis scan. And then the other just one I want to show is just this scan here, okay, that I do a lot of. Sorry guys, just want to find this fun scan. So another one's found is just EBND, which came up in a descending triangle scan just on the system, okay, and so just a scan I showed before. And so I do those scans a lot just because they just find resistance points and evidence of stocks that are in bases. Now, this is an emerging opportunities acting like ETF, right? So an ETF for emerging markets. Haven't done really any reading on it yet. I think I will. But I just, seeing this sort of stuff is so constructive because we've got an ETF or, stock, or what, doesn't matter what it is, that is showing signs of an uptrend because all these, it's jumped on top of all those moving averages. They're still pretty much together. They're not really apart and extended. And then it's putting in a really constructive base, okay? It kind of reminds me of the hack and the CLDD and the NDQ and what kind of Asia's doing as well, right? It's just like base in here, doing a really similar pattern, isn't it? And so, there's so many things that look the same, and it's just a sign that we, really, in my opinion, there's a good chance we've got some good times ahead of us, and that's why I've moved, a bunch of cash in the market, and I'm pretty heavy at the moment. So now on the US market, what I'm looking at is I've kind of got enough on my plate at the moment. I'm loaded up on I'm loaded up on a bunch of other stuff. I took on my Apple position's pretty big for me, and then the only other thing I'm thinking about is Google, okay? And it's showing similar stuff, right? It's just showing the huge bases, 1, 2, 3 bottoms here, boom, 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 resistance, and this company, their cash flow is just crazy. They make so much money, and I know maybe they're not winning the AI race at the moment, but I don't believe for 1 second that they're not probably going to win at the end of the day. I mean, they'll be one of the winners at least, right? They're just too big and smart and powerful, and just have such a great business with their marketing and everything else, with their online ads and everything else they do. So I'm looking at this stock thinking, shit, can I afford not to own this? I've got a lot of US stocks, and the only risk is that the Aussie dollar is going to race from 67 to $1, and I'm going to lose 30-something% on lost currency movements. It's a risk, okay? And so the way I get around this, and I'll talk about that another week, is that I'm always looking at the Aussie dollar chart, okay? And I'm taking long positions when I think it's smart. So I always have, the more US positions I have, the more Aussie dollar position I have, okay, in a leveraged account. Only leverage for the Forex, right, because it's pretty standard. And I'm hedging, okay? It's pretty complicated stuff. I wouldn't advise kind of anyone really doing it. Not that I advise anyone on anything, but it's definitely how I get around that currency risk, but I'm very selective with it. That's it, guys. I'm going to bring out a cool newsletter in a few days looking at gear and dollar cost averaging into it and showing the power of compound interest and all that junk. All right, catch you up. Bye.